Hello, everybody. Good morning, good afternoon, or good evening from wherever you are watching us around the world. My name is Eno Eteng. I'm the market research analyst for InvestingCube. Today, we just want to focus on a few assets against tomorrow's big inflation report out of the United States. So, what do we currently have on the charts right now? So, here we have first, let's talk about what's happening in the geopolitical space. So, overnight, hopes had faded in terms of the discussion of what the status of the Strait of Hormuz would be with regards to global oil shipping. It's one of the critical points in the ongoing negotiations that has stuck out as a sore point because both sides, the US and Iran, have not been able to come to an agreement. And so hopes had faded for a quick resolution of geopolitical problems in the Middle East. And so we had seen oil prices actually rising a bit. But in the last 4 hours, we've seen oil prices now shedding some of the earlier gains of the Asian and early London session. Right now, the price has settled just a little above this 86.34 support level. This support, as you know, used to be the resistance from 15 July until it was breached. There was a breach and retest between the 17th of July, 20th of July, and then from there, the price just took off. And whenever price has bounced off a support and then breaks out to another resistance, it makes that support a very valid one. So again, we saw this support had been broken here, broken once more, broken to the downside, was retested here, failed. We had a bounce off 78.48, and eventually it was broken earlier in the week. That was on Monday. So right now, that price level now acts as a support in role reversal. Okay, used to be previous resistance, it's now a support having been pushed to the upside. So what's going on is that I think there are no renewed hopes that a deal might finally be worked out, but we don't know that for sure yet. There's no official confirmation, but we're also getting information that OPEC has had an increase in its production quota. And so these are factors that have kept crude oil prices relatively muted on the day. And so right now we have crude oil prices trading just above the $6.34 mark. Now we shift over to gold. Of course, gold has been in a massive uptrend after the disappointing non-farm payrolls report on Friday, and also after comments from a particular Fed policymaker, I think Hamak is his name, where he made comments yesterday to the effect that any rate increases at this point in time would not be of any benefit to the US economy. So you couldn't get more dovish than that within the current context of the situation right now in the financial markets as far as the US dollar is concerned. So with the dollar on the back foot, we saw gold prices rising above 4,400. In fact, they hadn't got up to 4,435 at the point. That was in overnight trading during the Asian session. But there has been a little pullback this morning, and currently the price action is relatively muted also, and we're seeing gold prices trading around a 4,382 price back, which in the current context acts as a support. Remember, this price level was last tested on the 17th of June. There was a strong rejection that led to price retracing all the way down even below 4,000. Then after a period of range-bound trading we had here, we now saw prices now break out of this triangle and just kept pushing up, taking out all these resistance levels outlined by the Fibonacci retracement points. And this is where we now are. So 4382 is now the current support. So we need to understand that tomorrow the inflation data for July will be released. Now, the previous data set had shown a cooling of inflation, but that report reflected the situation in June when the truce between the US and Iran was still holding. So this report is the first inflation report on the consumer end that will detail what has happened, okay, since the resumption of the geopolitical conflict. So the data here will now capture the inflationary expectations that were built up as a result of the renewed geopolitical tensions. So the markets are actually expecting the core CPI month over month to rise from 0.0% to 0.2%, and they are expecting the analyzed version of this data to drop slightly from 2.6% to 2.5%. While, of course, the headline numbers on a month on month and year on year basis show that markets are expecting the numbers to read at 0.1% for the month on month version and 3.4% for the analyzed headline number. So it will be interesting to know what the markets think of the data when it comes out tomorrow. But with the US dollar currently on the back foot, if we see a cooling of the inflation data below the market expectations, we're going to see gold prices taking off from here and at least we're testing the 4452 resistance level, which, as you know, was a previous supply zone right here. It had actually been a very strong support in May, but once that support was degraded, it's not been retested again since then. So we'll be trying to see if the market will be interested in retesting that price level if the inflation data is seen as USD negative. However, if the inflation data comes out hotter than expected, then you're going to see the US dollar rebounding. Gold has already extended quite a bit in the latest uptrend move, and if we see an inflation report that is deemed as supportive for the US dollar by virtue of the rise in US long-term bond yields, we're going to see an opportunity to take profits from here, and we're going to see the US dollar pushing back against gold, and gold might now have to retest some of these resistance levels that it has breached before, which are now functioning as new support levels. Okay, then let's see what's happening on the USDJPY. This is also a currency pair that has shown some interesting price action in recent times, mostly because of this move right here. This was the interventionist move by the Bank of Japan that sent prices down from 164.00 all the way down to this low at 155.17. Of course, there has been some profit taking on the Japanese yen, and so as traders have exited from the profits on Japanese yen longs, we've seen the US dollar pulling back and clawing back, but is now approaching the 159.52 resistance. So again, we are seeing some very muted price action over here. I think traders are all waiting for the inflation report for tomorrow. So again, if the inflation report is red hot, that will be deemed positive for the US dollar. We could see the US dollar uncapping this barrier right here to at least retest 160.53. Whether or not the move will be strong enough to uncap this new barrier here remains to be seen. But that's what the situation is. And if the inflation report is deemed as negative for the US dollar, then we're going to see the yen resuming its strength against the greenback. So really, we need to just look at what's happening with the US dollar because it's the currency that is really determining a lot of the price action that we're seeing in the markets this week based on the inflation reports that are coming out. Don't forget, when it comes to US inflation, we have the consumer price index, which measures inflationary trends on the consumer end of the value chain. And then we have the producer price index, which measures producer inflation. Now, within the context of the geopolitical situation, producer inflation data is going to be very, very important because people would like to know whether companies are starting to feel the pinch when it comes to input costs, because these are the costs that will later get transmitted into the consumer end of the chain. So even if the consumer price index doesn't really capture a lot of what happened in July, definitely the producer price index is the one that the markets are actually going to be looking for toward a lot more this week. So you can see here with the US dollar index, the dollar index basically topped out at around 101.67, and in tune with the weakness of the US dollar this week, we've seen it pull back and find support at 99.44. So this support is going to be tested again by the inflation data. If the inflation data do not favor the US dollar, you could see this support come under real pressure and it could even give way. which will allow the US dollar index to test the next support level at 98.62. However, if the US dollar gets a boost, gets a fillip from the inflation data, then we could see the boost aim to push this all the way to 100.61, where that barrier is now going to come under some serious testing. So we just wanted to look at these different scenarios covering the USD associated assets, because these are the assets that are going to come under scrutiny when the inflation data hits the wires, and that's where you should actually be putting your money on to trade and try to profit from the data that we released. So thank you for following this video and for watching it. You can share it amongst your friends and get some lessons to learn out of it. And our next video will be done after inflation data has been released to the markets, where we can now review the price action in response to the CPI and PPI data. Thank you very much for watching, and we invite you to enjoy the rest of your trading week. Bye.